Welcome to Monday's Market Outlook here at Wealth Creation Investing. Matthew Buckley, Chief Investment Strategist, and welcome to Bizarro Market again. Now, a week and a half ago, folks, unless you've been living in a cave, you know that the Fed chief shot across the bow of U.S.S. market, and the market freaked out. Not only here in the United States, but around the world. It really was the shot heard around the world. After seeing that he freaked the hell out of world markets, the Fed chief sent out a bunch of his lieutenants throughout the week, last week, to every microphone they could find and essentially walked back what the Fed chief said or what the Fed was going to do. You know, everybody just relax. These aren't the droids you're looking for. Party on. Keep drinking all the liquidity that the bartender's serving up. I think these Fed chiefs from around the different, or the Fed presidents from all the different areas around the United States have done a huge disservice to the markets. Now, technically, we're back in Bizarro market, where good news is good news and bad news is good news. Now, bad news, economic data, means good news for the market because it means the Fed isn't going to go anywhere. Again, the Fed chief said any decision to end or throttle back on quantitative easing was going to be data-driven. Well, if the data aren't good, then the Fed's not going anywhere. So again, we're back in Bizarro market. Good news, bad news, good news, and we're going to melt up from here. So it's going to be that melt up. We are going to have an extremely volatile summer. We're going to move sideways to up and to the right, but it's not going to be pretty. We're going to have these triple-digit up days. We're going to have these triple-digit down days, especially as we come into Q2 earnings season. Seeing the bond market implode, folks, that shot not only went across the bow of the U.S.S. markets, it hit the U.S.S. bond market, the ship next to us, and sank it. Where's all this bond money going to go? It's not going to go in a Folgers can in the yard. It's most likely going to go into equities. So we're going to see this melt up continue until literally the bartender fires that shotgun into the air, which he did a week and a half ago, but ends up pointing it at the drunks in the bar and chases them out. That's going to be when he takes his foot off the accelerator and dials back $85 billion a month to $65 to $45, whatever it is. But I believe it'll be a nice, slow, kind of like Greenspan did when he raised rates. It was literally, you could look at the chart, it was a stair step. It looked like a set of stairs going up and to the right. I think Bernanke's going to do, down and to the right as he steps back the quantitative easing. So might be crazy like a fox. The markets, I think, will look at, let's take a look at the flight schedule this week. Relatively boring Monday. Had some economic data with final manufacturing PMI and ISM numbers. Construction spending came in flat, and the ISM manufacturing prices a little better than expected. Tuesday, some factory orders and vehicle sales, and then also a couple more apologists running out the microphones to tell everybody to relax. But Wednesday, here's where it gets really interesting, folks. Even though it's a holiday week, be very careful. Why? Well, ADP non-farm payroll comes out Wednesday afternoon. We'll get some trade balance, but we also get weekly unemployment claims on Wednesday since the market is closed for 4th of July on Thursday. We'll get some ISM non-manufacturing PMI and also some crude oil inventories. Also Wednesday night, this will be very interesting. Even though our markets are closed on Thursday, the Bank of Japan's governor, Kuroda, is going to speak. Now, Japan's really catching a bid today. Looks like they might have done it okay. Looks like they might have had a soft landing. Their GDP was good, seeing some good economic numbers, even though some vehicle sales just completely fell out of bed in Japan. But I think with the Nikkei where it is, we might not see too many reverberations across the Pacific to our market. I think the Nikkei might have some wind in its sails. And the Bank of Japan can kind of sit on their hands. So they might have, I don't know, folks, and I'll talk about this tomorrow morning in my primary live trade brief over at Top Gun Options. They might have found the right mixture. They got all the dials right and might have had a nice solid handoff from their quantitative easing to a relatively okay economy. Not good, but at least they think it can stand on its own. So it'll be very interesting to see what Kuroda says. But obviously, the big market moving information we're going to see is going to be on Hangover Friday, the unemployment rate and the non-farm payroll. Okay, so and average hourly earnings will be interesting to see as well. But obviously, these are the market moving numbers. But again, welcome to Bizarro market. If the unemployment rate goes down, the market's going to say, well, that's good. The Fed can kind of leave because unemployment's getting better. Non-farm payroll is looking for $1.62. If it misses to the downside, again, the market will say, well, you know, the market or the economic data is getting better, so the Fed can leave. If it, I'm sorry, if it misses to the downside, obviously that's not a good thing. Remember that 88,000 out of the blue. If it misses to the downside, obviously the market says, well, Fed's not going anywhere because these numbers aren't good. If it misses to the upside, the market rallies because okay, well, the Fed can leave and the economy's doing well. So very interesting times that we live in right now, folks. Again, it is going to be volatile for the rest of the summer. Having some great trades, especially on the VIX. Put on a bearish double vertical on volatility about 2 weeks ago, and I closed that trade out today for a 250%, whatever it was, profit. In 2 weeks, about $2,500 profit right about here. I put it on in a primary live trade brief. As volatility spiked up until the lower 20s, I said, all right, time to get bearish on volatility because this is what vol does. It spikes, it comes back, it spikes, it comes back. So in tomorrow's primary live trade brief, I might actually get bullish on volatility, but I'm hanging out a little bit to see if we get back to what's been our resting heart rate for the past 3-6 months, which is that 13 level, right? Look at this, right around 13 is the resting heart rate for the VIX. But every month it seems we have a freak out, right? It seems that something freaks the market out for the past 6 months, and we get a big spike in volatility. But look what happens. The VIX reverts to its mean. It's a mean reverting instrument. So this is we've been trading the heck out of the VIX over at Top Gun Options and having a good time doing it. But it remains to be seen whether or not we're back in Bizarro market and we get back to VIX 13, where everybody's just singing sunshine and lollipops and everybody's happy. So I'm probably going to sit on my hands for a little bit on the VIX. But again, closed out that bearish double vertical on vol for a nice multiple triple-digit gain in 2 weeks. So good stuff going on over at Top Gun Options. All right, guys, I got to run. Like I said, relatively quiet week, but it's not going to be a relatively quiet week as we get into Hangover Friday, okay? So enjoy your 4th of July holiday. If you're over here in the States, be safe. Keep all your fingers and toes away from the fireworks. Enjoy your hot dogs, hamburgers, and remember why our nation was founded. And then look at what's going on today in the White House. And I'll leave it at that. All right, guys, happy hunting. Make sure you hedge and have a great 4th of July. I'll see you on Friday for our Friday market wrap-up.